the Bakersfield College Launch and Learn Hot Series. This is our very first webinar series we're going to be bringing to you on Tuesdays in July. We are so excited that you are here. My name is T. Johnson. I'm the Director of Entrepreneurship and Workforce Development under the Launchpad. We also have Tamika Powell here. Say hi, Tamika. She is our
Hello,
community.
everyone.
Yeah, she's our community services coordinator. She is always that quiet. And then we have our marketing lead. Our Molly is in the house. So we are so excited welcoming you guys all here. Please be sure in the chat, make sure you click to everyone, put your business down. We're going to be giving you some shout outs. We're going to make sure that we network after the presentation. We're going to open up the floor so you can then talk and put on your cameras as well. So we don't want to take too much time. We hope that you have your food in front of you. Apparently, we forgot that on our checklist. So all I have is some apple juice for me. But make sure, yes, good morning, good morning. Make sure you put your social media platforms down there. We're going to be putting ours as well. Molly's going to be handling our chat. Tamika's going to be handling our Q&A. On your bottom dashboard, you should see a Q&A. If you have any questions throughout the presentation, it has a question mark on it. Ding! Make sure you put your Q&A. Tamika's going to be monitoring that. She'll be reading your questions. She'll be answering questions, and we'll be leaving some questions for Shontay to answer. Miss Powell is awesome too. Yeah, we ain't gonna read all that. Anyways, yes, she is awesome. So welcome. We're so excited to have you guys here. I want to introduce you to a wonderful individual, and what I want to do is share a little bit about her to you. When we first decided to do our Launch and Learn series with the Launchpad, the purpose is just to get information to the people where they're at. We want to help support our small businesses. We want to build the capacity in our small business, no cost. We want to make sure that we are there to support. And so one of the people that we reached out to is an industry leader, immediately said, yes, I'm on board. I would love to share my knowledge. And that is the Community Development Financial Institution Director from Valley Strong Credit Union, which is Shontay Smith. She has over 24 years of experience, of years of successful, she says successful finance, because you can have experience, so mean it's successful. So successful financial industry experience with strength in driving business growth, recruitment, and development of talent, navigating complex crossroads and business integration with banking and cultivating strong community partnerships. And that's what Valley Strong does. They definitely cultivate strong business partnership. She will explain what a community development financial institution is, as she is the new director. It is our the baby of all of the CDFIs, but I would say one of the strongest ones out there, along with Access Plus Capital. She was the VP of Community Manager for Chase Morgan, Valley Strong snatched her. They snatched her, which is a good thing. So she's been providing financial education throughout Kern County region for probably the last 24 years. She is heavily involved here in Kern County, serving on the Housing and Opportunity Foundation, yes, Family Fellowship Church board, advisor to the Kern High School, Entrepreneurship Resource Center, African American Network, and she is definitely a partner here with the Launchpad. So if you guys want to give a clap in the chat to our presenter this afternoon. And like I said, if you have any questions, put it in the Q&A box so Tamika can monitor it. After her presentation, we will open the floor for networking and talking and really to get to know each other. So let's give it up to our first webinar series presenter on financial literacy, Shontay Smith. Go, Tay.
Thank you so much, T. Thank you so much. I didn't know she's gonna bring up that big old picture of me, y'all. I'm a very informal person, so that's what you're gonna get today is informal, but we're gonna get educated. So, but I'm excited to be here. I love doing this education. I hope you guys brought, paper and pen, because This is an informal setting. I try to kind of open you up to the small business education, but open you up to the bank side. As you've seen, I've worked the larger institution. Now I'm on the credit union side, and I try to give you all kind of the history of how banks look and underwrite in lending. So please bring paper and notes and be ready to ask questions at the end of the presentation. You're going to want to unmute yourself and ask questions during this presentation, but I'm so glad that y'all all on mute right now. You force on mute because when we get to the credit portion of this, a lot of folks have questions. So we will get started. I do want to, as I share my screen, I'm going to just tell you a little bit about why we at Valley Strong decided to become a CDFI, which is called the Community Development Financial Institution. I'll tell you all a little bit of why we decided to do this. We were already doing the work here at Valley Strong. We were doing loans for the underserved and underbanked community. As a credit union, most credit unions, the difference between the traditional banks, and I'll just say where I came from, um, the type of banks I came from are very traditional and conservative. So many of the small businesses that are here on Zoom today, many of you, may bank with a traditional bank, but when you get ready to go for probably your first loan, you are probably you probably will find yourselves at a disadvantage point when it comes to the lending because those banks are typically very, very conservative when it comes to the lending piece. And so that's what makes it so hard for small business owners to launch out and get lending. So the CDFIs is where they help the underserved. They go and do the riskier lending. And I see one of my partners here in the community, Raquel Jimenez from Access Plus Capital, who is also a CDFI here in Kern County. We learned to collaborate and work together to help out small business owners. And so that's the other thing that's different with CDFIs. We're not we help clients together within our communities. And so the community development financial institutions are there to help amplify not just the small business owners, but also consumer lending. So all these years, Valley Strong has been doing the work of a CDFI. We just decided that since we hadn't had a CDFI within our community, that it was time to make that difference. Now, the biggest difference for us now as a credit union, now we can actually receive grant money as an institution from the government to amplify our lending to the community. Let's make sure that you understand that. That don't mean we give out grant money, y'all. That means we amplify our lending so that we can actually do more lending into the different communities that Valley Strong serves. So many people think when they see CDFI that we're going to give grants. No, that's going to help us be able to give more loans out to our community and be able to service more people that may not traditionally be able to go to other traditional banks. But if you're on the side of not having the best credit score, a CDFI is probably where you should be at. If you don't meet the requirements of traditional banks, CDFI might be able to assist you. So that's what the CDFI actually is. And that's the beauty of being able to have CDFIs in your neighborhood. So can you guys now see my presentation, T?
Oh yeah, it's great.
Okay, perfect. So let's get started. Um, One of the things that I love to be able to start off and say is many of you have put so much work in building your business. Some of you have studied, some of you've had a long time hobby. You may be a beautician and you've been doing hair since you was 5 years old and you can do some cornrows and hair better than anybody on the corner. But one of the things that's critical to know as a business owner, you may do your business well, but one of the other critical parts of your business is your financial management. And these two things go hand in hand as tasks. So if we all, look at the two tasks, running your business, a productive business also means your financial management is another top piece of your business. These two go hand in hand. You can't do one without the other. And as a matter of fact, the financial management piece, if you don't do it well and have it side by side as well as running your business, the financial management piece will fail your business. Think about it. Most businesses today fail due to the financial management not being ran well. Think about some of the largest companies today that are going under because the finances are just not there anymore because of today's economy. So, ensure that what we're going to be talking about today, this is why this piece of actually, learning the financial parts and learning to have access to capital is very important. You can't half step on the financial management part of running a business. Even if you say, but I've never been good, Shontay, at running my finances, you're going to have to get good since you decide to be a business owner. And you're going to have to learn. And this is why you utilize your community resources. This is why you attend cohorts and classes such as BC Launchpad when they're running classes such as this. When there's classes that's on QuickBooks, you join a class or you look into hiring someone that can do some of those services for you. So let's get into this presentation and learn more. So one of the first things about small business lending is to understand when to get small business lending and what it is. It provides, of course, capital for your business. It allows you as an entrepreneur to invest in your business needs. Now, one of the things that everybody likes to do, and I've been doing this for such a long time, you get business owners and they'll come into, the credit union and they'll say, oh, Shontay, I need to get a business loan. I'm like, great. The first thing, and I know Raquel, you out there, first thing that we're going to ask you is, how long have you been running your business? And you know what some people say is, oh, just a month. Okay. In a lot of instances, for especially the traditional banks, for the traditional banks, you typically need 2 years of running your business and financial documents for them to even run an application. So understand that, running a business and getting your first loan, they're looking for some years of experience. CDFIs are going to be different. There's something called startup lending. We're going to talk about that in a little bit, okay? Now, know the other thing. When you're ready to start seeking financing, know how much money you're going to need. So make sure that you know what you need funds for. Funds can be utilized for working capital. Working capital is to have that extra, spare of money. You might want to use these funds to increase your staffing. You're getting so busy in your business that you can actually make more revenue. You can actually gain more money and bring more money in service to your business by hiring people. So you may need a loan to help you service more. You might want to do a renovation to your business. You might need it for marketing or real estate purchase or auto. We do here at Valley Strong, we do a lot of business autos, equipment. So there's so many different ways you can grow your business and that'll allow you to invest in which you'll need access to capital for. It's just knowing the right timing and when and how to get there. So let's take a look at the different types of loans that's out there. Now, in general, this is just the different types of loans. We wanted to have this education to where, it's open for everybody. Doesn't mean that at Valley Strong, everybody had that we offer all of these, but for the most part here at Valley Strong, we do, except for one of the products, and I'll let you know which one that is, and that's the Small Business Administration Lending. And we'll talk about that in a moment. So for most of the small business owners that's here on the line, that some of you may have been running your business, over 2 years. Some of you probably already have a business credit card. For those of you that have came on and you said, hey, I just decided to start running a business. Maybe you've been in business about a month or two. Most of you who are just getting started, if you've been in business maybe 3 months or so, you're probably going to start off with a business credit card. That's probably going to be your first initial startup of running a business. And the thing that you want to know about this is business credit cards are typically unsecured. Unsecured means there's no collateral. The bank is saying, hey, there's nothing, we don't have a building behind this credit card that we can hold on to. We don't have a car or asset that you own. So most of the time, business credit cards will probably give you a much lower amount than you expect. I'll get business owners that's been running the business for about a few months and they think the bank is going to give them a $50,000 credit card. It ain't gonna happen, y'all. I'm being honest with you. It's not gonna happen. Time tells all when you run a business. So business credit cards may come out to, anywhere up to $25,000. The longer you've had the business, even if it's a year and you've had it for a year and you've done your taxes on it and so on, you might see a larger loan amount. But typically, you're running a startup business and you're up to a year, you might see a larger loan amount. But if you've been only about up to 6 months or less, you're probably going to see a much lesser loan amount, maybe 5,000, maybe a little less, depending on your credit. We're going to talk about that in a moment. But business credit cards can be a great resource to be able to purchase products, to be able to purchase services for your business, and you want to make sure you utilize it right. This can allow you to, purchase your products every month. But as you make money and create revenue for your business, make sure you pay off the whatever you utilize on that credit card. Make sure you have a plan for that business credit card. Make sure that if you're going to go out and get that business credit card, you have the cash flow, meaning that your business account can afford to pay on that business credit card also. Common mistake small businesses make. Oh, now they got a business. I want to go and get a business credit card, but you have no money sitting in the business checking account. Make sure that you have a plan for it and you can afford it. Okay, so this is a really important task that this is your first stand up to building out your business credit. Now let's move on to the term loans. Term loans can range from so many different areas, and different banks will hold different types of term loans. So you have your auto. Many people don't realize that for your business, especially if you do deliveries, especially if you're running a business, you guys see the lawn service businesses. Some of the guys who actually run those services, those trucks can be put under a business. For those of you that we do, loans for realtors, because the cars that they drive to service and run around to the different homes, they may want to put that under their business. Even for semi trucks, we may not do the semi part here at Valley Strong, but we do trailers all day long and lend for new trailers. So there's different types of business auto loans as well. Equipment loans, if you're a business that has to work with equipment goes down all the time. That's another option where you may need to purchase equipment. The one thing about the term loans, most of the time, you have collateral. So what you'll see with a term loan versus that business credit card, these loan amounts will typically be higher. They'll have a term. And also, the CDFIs and banks will ask for a lot more documentation. They may also want you to be in business longer. They may say, hey, you should be in business maybe up to a year, depending on the product that you're asking for. And then the terms also, you're going to have a certain term. These terms may go up to, depending on the type of loan. If it's an auto, maybe 6 to 7 years or less. And then if it's a storefront, you could be looking at 15 to 30 years, depending on the type of loan and the institution that you go to. So remember, term loans, you're typically dealing with some form of collateral. It's a little bit different. They may ask for a lot more documentation. Now, if we go over to the revolving and non-revolving lines of credit, with this one, it's very different. We're going to get into the weeds here. So revolving and non-revolving lines of credit. Typically here, you're going to see businesses when they're asking for a line of credit. And what a line of credit is, think of it as a huge credit card, but there's no credit card. And basically, businesses that typically do this, they are starting to grow. They're starting to pick up business. You'll see businesses utilize this. Trucking businesses love this. And the reason why, because they actually will typically have the collateral. This is a huge collateral type of loan. The bank will ask you, What do you have? Do you have a building? Do you have trucks? Do you have something for us to actually put down as a loan? Because if you stop paying on this loan, I'm coming for your assets in order to replenish the money you don't pay us. So these are a lot more riskier to the actual banks and credit unions. So they're going to ask for everything under the sun. They're going to make sure that a business has the proper cash flow. That's why these businesses are usually a lot larger. Usually these type of credit lines are about 100,000 or more. And so that's why with this type of loan, it's highly secured product. Um, with a revolving line of credit, typically what that means, let's give an example. A business owner says, hey, I need $100,000 line of credit. When you're asking for a bank to give you $100,000 line of credit, that means that you probably should have a large amount of collateral for the bank to hold. You should be making quite a bit of revenue, well over 1 million. Not a small business, because you're asking a bank to give you $100,000 to utilize at your own will. And that line of credit, you can touch it when you need it. Now, although whether you use it or not, so if you don't use the money, basically you don't pay on it. You only pay on what you use. Here's the other thing about a line of credit. Most institutions, you have to get it renewed every year. That means that just because you got it approved a year ago, you have to qualify for it again. So this is big business here, and this is where it gets very risky for not only the business owner, but for institutions too. The non-revolving line of credit is basically a business saying, hey, I want a non-revolving line of credit. I just want that money to be given to me up front. The biggest difference here is that you're still, the interest rate is off of prime rate. So it's a variable rate, just like your credit card. So think about this. The interest rate on these are very high, and they're variable. So this is one that is an adjustable rate. If rates are low, then it can be great for your business. But if rates are high, then it can be very costly if you utilize those funds. So just a little knowledge, you're probably like, man, that's a lot of information. But someday, most of you aspire to grow your business. You may think about, and you may have a point in your life where this is something that your business is looking towards. Okay. Now, unsecured loans. We're going to spend a little minute here because most of you will probably have some interest here. Unsecured loans is probably where Raquel and I from Access Plus Capital and Valley Strong, we do a lot of these for startup businesses. Now, at Valley Strong, our limit for startup businesses, we do up to $25,000 in startup lending. Most of the time, it's going to be done in business credit cards. We may do it in any form of equipment lending or in other resources, but it's typically unsecured loans. Unsecured loans, I want you to think about this. When you do an unsecured loan, there's no collateral. So it's a riskier loan for a CDFI to do. So interest rates could be a bit higher. The terms are short, so they could be anywhere from 3 to 6 years. And you may not come out getting a large loan amount because once they pull credit, they're going to be looking at the ins and outs of your credit. Now, at Valley Strong, we typically, just to do a startup loan, we're looking at your at least 3 months of your business statements just to get started. And so this is where unsecured lending can be risky. This is where you also have to knowledge yourself as a small business owner. Where am I at financially? And we're going to get into this in just a moment. Many of you may be wondering, well, will they look at my personal credit? Yes. Banks and credit unions, CDFIs, we will get all up in your personal credit. And we're going to talk about that in just a moment. We do look at your personal credit. I know some of y'all might be in your feelings, but why? I always have to explain this. We'll talk about it on the next slide. But especially when you're a startup business, that's a lot of that's all you have to stand up on. And that's the only way a bank can judge your character, is if they're going to get paid back or not. So unsecured lending is the riskiest for many financial institutions. And I'll tell you this, most larger institutions, conventional lenders, do not offer the unsecured loans. They'll offer you the business credit card, but they don't go deep into the sand such as the CDFIs do like we do. So make sure you take note of that, because when you're looking to start doing a small startup loan, or you're looking, even if you've been in business for 3 years and maybe you didn't have all your financials together, you're going to land in this bracket. If you're at, hey, I just opened a business account 5 months ago, you're going to be in this startup lending bracket. Okay, you may have been running your business for 3 years, but if you don't have the financials that I'm going to show you, you're kind of in this startup phase when it comes to lending, in the business lending world. So this is the piece where I want you guys to start looking at, stop looking and being so emotional about your business, but start making sure you're educated about the business lending world and how to look at institutions and CDFIs. Now, I'm going to go through the bottom three really quick, because a lot of the bottom side it's a lot of information, and we're only going to just grace over these because there's so much. I'm going to send you to their websites. So the SBA, which is a Small Business Administration Lending, the SBA has so many different types of loans. And I know Access Plus Capital, they offer SBA lending. Valley Strong, we do not at this time. SBA lending and state guarantee loan, the state guarantee program. The state guarantee program is what we here at Valley Strong, what we offer. In a nutshell, what both of these two do is they both offer government type programs and state loan programs that are built out for business owners. When you would utilize these type of programs is, let's say as a business owner, you're looking for either a micro loan or you're looking for some type of real estate loan, and maybe you went to a bank or a credit union and you didn't get approved based on that institution's underwriting guidelines. So what happens is that's when you can stop. I would always say stop before you even make a purchase, any large purchases for your business. Go to the SBA website or go to the state guarantee program websites and read on the type of loans that they have. And you can even contact your local CDFIs, and we're always here to give you knowledge as well. And you want to see what underwriting and what type of loan programs they are offering. If you know that your business meets any of the SBA or state guarantee loan programs, your next step is to look up what financial institution actually offers either SBA or state guarantee loan programs, and you can go to those institutions or pick one institution to go to and apply for an SBA loan or apply for the state guaranteed loan program. Make sure you tell that institution that you're interested in those loan programs. Now, the reason why these banking institutions or credit unions and CDFIs will actually apply and they offer these services is because what they're getting back from the SBA and from the state guarantee program is that they're getting a guarantee from the government or from the state that if you stop paying for your loans and you actually, go into default, those institutions will get at least 80% payback from these loan programs. So the banks won't take a full loss. So that is why on both sides of the bandwagon, it's pretty much a plus for the business owner and for the institution. So these are great opportunities when you're looking to grow out your business. Great opportunities to knowledge up yourself. Is it an easy read when you go to their websites? No, but that's where you can reach out to people like myself. You can reach out to people like Raquel, T. Johnson. We're here to help. You don't have to figure it out on your own. Just the last few tidbits about SBA. SBA offers microlending. They also have a franchise type of program. So if you've been thinking about doing something big with a franchise, go to their website. They do have franchises where you can also qualify for franchise loans under SBA. State Guarantee Program also has some great loans that they offer for mid-sized business owners and larger size business owners as well. So great opportunity if you're looking to grow your business. The last one on this page is our real estate construction and tenant improvement allowance loans. I'm going to split these up. Real estate construction, what I'll tell you is this is when you get into that big time. And real estate construction is not easy, just as it is not easy when you're looking to build your own house. So think about doing real estate construction for a business, even harder. There's so many permits you have to have. You have to have your commercial real estate person, and you also have to have a business banking officer that you're working with. And so it is a bit different. You do have to go through certain qualifications with the bank. Sometimes you have to have two institutions that are looking to work together for the lending as well. Um, there is a lot of documentation that's going to be asked for your business. What's really important with real estate construction is your cash flow. Is your business wealthy enough? Do they carry enough revenue? Are they making enough money to afford the payback of this real estate loan? That is going to be critical. Even if you're looking to purchase a storefront business, that's the critical point of what institutions are going to look at. Most loans, everything we talked about, that's always critical when you're applying for a business loan. They always want to see how you plan on paying us back. And the key in this is your business profitable? You always need to know, is your business profitable? And we're going to talk about that more in just a moment. Now, in the next phase, the tenant improvement allowance loans. The tenant improvement allowance loans is something where some business owners are shocked, like, I didn't even know landlords do this. But tenant improvement allowance loans are when you are looking either to move into a storefront, or you're looking to rent out a actual landmark for your business. And you have a landlord that is offering to allow you to actually refurbish that office space or that restaurant. Most of the time, it's either a restaurant, a store, or something where you're going to have foot traffic walking through. And the landlord will typically give you a certain dollar amount that you have up to, and it's usually based on the square footage of that store. So it depends on the square footage. They'll tell you, hey, I'm going to give you $60,000. I'll match you. If you have 60,000 and you refurbish it out of your cost first, and then whatever you paid out of that 60,000 or up to 60,000, I'll match you and give you the money back. So what business owners can do, you can go to an institution, you can go to CDFI, and you can see if you qualify for lending, and see if they will actually approve you for that loan, and then do your refurbishment with those funds, and then receive those funds back from your landlord. Now, you get offered a tenant improvement allowance loan. Make sure you speak with an attorney. Make sure you have those documents looked over. This is not an easy transaction. This is not a 1, 2, 3. Oh, he said he gonna give me this money. Be smart. Make sure you go and have everything looked over. Understand what type of refurbishment they're talking about. Make sure that they're not talking about you can knock out the front door of the business and knock out windows, because it's not like it's a lot of money. Be smart about how you utilize funds. And I'll give you guys an example. I had a business owner who he was offered. This was his second storefront. He was offered 75,000 from his landlord, and he came into our member business service office for a loan. He did not qualify, you guys, for the 75,000, but he did qualify for 35,000. So he went back to his new storefront. He did refurbish the storefront, and he used 30,000 of those funds, and his landlord did give him back the 30 grand. So you make it work for you. Make it work for you. Be smart about how you do your business with, if you're going to do a tenant improvement allowance loan, because it could get complicated, and you just want to make sure that you're securing your business. Always make smart financial decisions and get everything looked over if you're not sure about the contract or what you're being offered. So that concludes the different types of loans. What I'm going to go into next is going to be about the credit piece. Now, once I go into the credit piece, into this, I'm going to open it up for some questions, and then we're going to, play a little bit of games here, and then we're going to do some more Q&A. Because I'm sure you guys have a bunch of questions for me. Usually, folks are like ready to raise their hand and ask me a bunch of stuff, and I hope this page is going to answer a lot of it for you. So, how
Okay.
do you? Oh, yes.
We have a question and answer box. We're asking people to put their questions. So please, so far we don't have any questions in the box. So if you see the Q&A on your dashboard on your either the bottom or top, whether you're mobile or desktop, please put your questions in there for Shontay. Thank you.
So, thank you, T. So here's where I tell folks, take a picture of this page or, save it. And I'm actually working to actually put this on our Valley Strong CDFI webpage also. We're going to embellish it a bit, put some more information on here. But take note of this. This is how you prepare for your business and how to start getting ready to get loan ready. Not only are you getting business loan ready to apply for lending and to keep up your business so that you're always ready, but T and I were talking about this, and I also have spoken with our city people from our city. You should also take this for when you're ready to apply for grants for your business. This is also a lot of this is requirements that they're asking for. And so this is just a in general factor of what you will need. Now, I've also sat on panels with other institutions that are very much more traditional, and same thing. We wanted to really teach you the ins and outs of the entire financial industry on what it takes for business owners to start getting yourself access to capital ready. So, if you are under 2 years in business, and let me say this too, if you haven't started doing some of these major things, you got to start thinking, hey, I don't have a business checking account yet. Okay, so now, according to documentation, or you haven't filed your taxes yet for a business, you're under 2 years in business. You may say, but Shantae, I've been in business for 5 years. Well, if you haven't been running your business through a business checking account, or if you haven't filed taxes under your business, you're under 2 years in business, according to financial management. Okay. Now, to some CDFIs, depending on what you're asking for, they may be able to work with you on some of your personal finances. But when we're looking at in general, when you're asking under a business EIN number, here's what we're looking for. So first, business plan. The reason why we put business plan on here, most of the time, institutions, we don't ask you for your business plan. We don't. Um, but we wanted to put this on here because this is often one of the things that small business owners, mid business owners don't have is a business plan. The business plan is for you. It's for you to actually keep track of your growth of your business. If you are in the same place you've been at a year ago or 2 years ago, meaning you're making the same money, your business account balance looked the same as it did 2 years ago. And I always say this, Leroy from down the street started the same business that you have, and he rolling in his Benz, and you still rolling in your little box, whatever that may be. It might be that Leroy got a business plan and you sitting over here just working off the same ideas you've been working on for the same amount of years 2 years ago. Business plans keep things flowing. Think about it. Some of your most profitable businesses today, do you think Valley Strong, do you think we don't have a 5-year plan? Of course we do. Think about the beauty industry, hair products. You ever see a CEO of a hair product line and they say, yeah, at the end of the year, we have this new product coming out and it's going to do this and this for your hair. What about the food industry? They say, hey, we have this new recipe, this new, taco coming out at the end of the year, or they know what's coming towards the end of the year. A lot of times they know what they're doing 2 years ahead of time. A business plan keeps you ready. and it keeps you and allows you to make changes throughout your business, especially if you see your business not being as successful. So it keeps you ready and it also allows you to grow. Now, something else we didn't add on here, but a business plan can also contain this. So when you go out to actually build out a business plan, write this down: financial projections. Financial projections is another great asset for you to help you stay on track to financially grow your business. Financial projections, you can work off your business checking account. You can work off of the revenue that you've built from a year ago. It'll look at historical data to see how well you've built your business. You can look at your products. What product do you make the most revenue off of? And you can start strategizing where you think you're going to be at in a year because it's going off of historical data. That's how most successful businesses actually build their business today financially, is by doing financial projections and a business plan. They work hand in hand. So it's for you. It's for you to know how well your business is growing. It's for you to look at how do I boost my business and grow year after year. Okay. So now the rest of this is the stuff that us financial institutions and CDFIs will need. First of all, yes, we will review personal credit. So let's talk about this. Your personal credit will be reviewed in business. So you are the guarantor. You are the person who owns your business. Even though you may have an EIN number, and I'll get this question all the time. Well, I have business credit. Let me tell you this. Most business owners, for your business, you may only have one or two things that is showing on your business. Maybe that little business credit card. That is not enough for institutions to say, well, you got business credit card on there. That's not enough for us to make a business decision on. And then you have Dun and Bradstreet, which most traditional lenders will utilize that just to look at how you deal with merchants, how well you pay back with other small vendors, just to see your stability of your business. But the personal credit allows CDFIs to look at your character. It allows us to look at, do you pay back your personal credit cards? Do you pay your mortgage on time? Do you have utility bills that's went into collection? Because that character falls right into your business. If you can't keep up your personal financials, how do we expect you to pay us back for a business loan? So yes, your personal credit is always going to be seen throughout the financial industry. And that is because it really falls into how they make decisions based on your credit score. Now, that's why it's critical that if you're looking at starting your business and you know you're at a point where you need lending, you may want to look at and say, hey, my credit, I have some derogatory. Derogatory means collections. It means I filed collection, I've filed bankruptcy, I have a repossession on my credit. These are things that if you haven't restored your credit, you haven't, take some time to clean up some things, now's the time to do that. And if you're working and balancing out your business, and you know that, hey, I'm below a 700 credit score, you might want to say, I'm going to keep this W-2 job for a while because I need to balance out my business and balance out my financials. Because especially if you can't afford to run your business and live off of the financials you're bringing in from your business, is going to be very vital. That's also what institutions are looking at when you go for a loan. Can you afford the loan that you're asking for? And then also everything else that you have running through your business and your personal. That's why that personal credit is so important. So ensure that you take time to take a look at your credit. Business owners should always aim to be over 700 credit score. You're an entrepreneur. You're always looking to grow. You never know when you may see yourself growing in revenue and you need a loan to do something in your business venture. You may need to actually go out and get a loan because of new equipment, and you don't want to be held back because of poor financial choices. Now, once you get to 700, don't just sit there and tag along, but I made it. Shontay said I had to be at 700. No, you better keep pushing above and get to that 750 or higher, because the higher your credit score, the better. The better. You don't want that financial credit score to be holding you back from growing your business. Okay. So understand that the credit score, your personal credit score, yes, we will look at it. Not just us. It is a financial industry, ordeal. We all look at that to make characteristic decisions. Now, let's move on to the business checking and savings accounts. Business checking and savings is crucial. Um, when you are looking to actually look for any type of business loan, besides probably a business credit card, um, sometimes with business credit cards, like if you're a startup business, we're going to ask you as a CDFI, we're going to ask you for your first few months of your business checking statements. So anytime you're doing any type of business loan, they're going to ask you for your statement. So get ready. Every time you apply for a loan, they're going to say up statements. So get used to forwarding statements over when you're applying for any type of loan for a business. That's going to be crucial. Even your grant applications, when you're looking to get grant money from whether it's the government or your local city, or any type of programs that's out there, they're always wanting to see those checking and savings accounts. And a lot of times is to actually see that you're running and functioning a business. On the bank side is to see how you're dealing with cash flow. How well are you managing your books of your business? QuickBooks and AutoBooks, these are entry-level software. QuickBooks has other programs for larger businesses as well. And if you say, I am not good with QuickBooks, you can take a class. There are so many classes that are offered free throughout the different communities, especially in Kern County. You can join a cohort that offers you a QuickBook class. And it can be entry level software. It's easy to do. It's transferring a lot of the stuff that you have in your business checking account over into QuickBooks. It'll make it easier for you to file your taxes. Some of you may work with a CPA, someone that, accountant that can actually take care of your books. And once you know QuickBooks, all these other documents on that bullet underneath QuickBooks, the personal financial statement, the balance sheet, and the income expense statements, QuickBooks will actually print out all those for you. So if you're sitting there like, Lord, this lady and pulled out all this stuff, I don't know what she's talking about. Don't worry about it. QuickBooks will actually print it out for you. AutoBooks will do the same. There are so many different apps and programs that will do the work for you. And they will actually, put it into PDF format, and you just send it over to your loan coordinator. And because they'll ask you for these documents, depending on what type of loan you're doing with your business, they will ask you for this. And so it's going to be good for you to know your QuickBooks, or have an accountant or someone who is running your financials of your business, have them working with you to send over this information. So these are essential things under 2 years that you should be doing. If you're over 2 years in business, this is your everyday. You have to continue doing this. This is never going to stop. This is always, you're just going to get better and better. As you grow, you're probably going to advance yourself into other products to keep this maintained, and probably help you in sync to, better software. So this will never change. Don't think, oh, the longer I'm in business, this will, I don't have to do all this. Yes, you do. Because you're going to ask for more complicated loans. So if you look at that over 2 years in business, these documents will always be asked for. Now, the last one under 2 years in business, please file your taxes. We can't lend to you if you don't file your taxes. And when you file your taxes, it's up to you if you want to write off everything as a business owner. But when you write off everything as a business owner, you make it really hard for us to lend to you, because what we see on your financial tax returns is as if your business did not make any, as if your business made no money. And in a business that is not profitable, institutions cannot lend to, and that includes CDFIs. So when you show negative, especially on those tax returns, most of the time, all that hard work we put into trying to get your loan approved, when we receive those tax returns, most of the time, that's when you'll see banks say, oh, we can't even lend because you're not showing us if your business is even making any type of revenue or income, or you're showing a loss. So be smart about who you utilize as your accountant, your CPA, and be smart about what you write off as well. Because if you know this is going to be a new year for you and you're probably going to need lending, you want to be smart about how you do your how you file taxes. I guarantee you we're going to ask you for it. So I'm going to pause here. And T, do we have any questions in the chat?
Yes, Tamika is going to be presenting the questions. Tamika, what do we have?
Okay, so we have one question that says, I'm ready to take my off-the-book side hustle to a business. Would a micro loan of 5,000 and under be a viable option? Like using loan for permits, licensing, etc.
Mm.
Okay, so let me ask, you've had the business, did they say for 5 years?
It didn't say.
No, it didn't say.
Okay, but if they have they had the business, sounds like it might be a startup. Have they done everything, or at least done the things under the 2 years? They at least have a business checking account.
I'm assuming no because they use the word side hustle. So
Okay.
they said, I'm ready to take my off the book side hustle, which means I've been making money, but the IRS ain't been collecting. So that's what
Okay.
I'm getting from it.
So a few things. You can apply for a loan, and this is what I always tell you guys. You can always apply for a loan, but there's some things you always have to do. You can't apply if you do not have make sure you have your business documentation so that you have your business checking account open. So make sure you have that business checking. Once you have that business checking, for us, you have to have it at least for 3 months because you have to show 3 months of your business statements. Once you have those 3 months of bank statements, you can apply. You can definitely apply. So that's what we need, because you sound like a startup business and you're looking for about a couple thousand. You can apply once you have those 3 months of business statements, and that's what you can bring it from any bank. It doesn't matter.
Great question. We have another question,
Okay,
Tamika?
we do. We have one more question, and this is more for the BC Launchpad. It says, are there any local resources that can help me with a business plan?
Yes, take it over, Tamika.
So the Bakersfield College Launchpad, we do have classes. We have a certificate of completion that can help you build your business plan. It's every quarter. We do have classes starting in the fall. If you're needing assistance this summer, we do provide one-on-one technical assistance. So you can just email us and I will put that information in the chat.
And we also have over 130 non-credit courses. As Shontay was saying in her presentation on QuickBooks and AutoBooks, we offer QuickBooks at no cost as well. And so we are all about upskilling the business owner and their employees. So we have a range of things from customer relations to QuickBooks, digital marketing, anything that's going to help improve your enterprise. We definitely offer that in all industries. So connect with Tamika. We'll get you started today.
And that is all the questions that we have currently in the Q&A.
Okay. So before I go to the next slide, one thing I'll tell you all as business owners, make sure, go to your resources. I'm a resource here at Valley Strong. You have Access Plus Capital, who's a CDFI resource. You have T. Johnson, Tamika over at BC Launchpad. And we have so many other different collaborative fronts here in Kern County that run cohorts and help business owners. Always stick to those resources, because I can't tell you how many business owners that I meet that have been misinformed. They've been misinformed, poorly informed about what it is to get approved through, the CDFI or traditional banks. The CDFIs, we're literally like your last step. And I'll tell you this, don't keep us to the end. I can't tell you how many times small businesses wait and they go to 3-4 other institutions that are traditional and they get declines. Well, when you get those declines on your credit, it brings down your score. Every time you get an inquiry, because you have them applying for your credit score, if you're already below 700, you're at like a 620, you're just bringing down your score even more. About time you get to us, and I know Raquel can probably say, yep, about time you get to us, you about 590. And it makes it hard for us to fight for, like, okay, we don't just make our decision based on your credit score, but it does make it a little harder to get you as much funds that you need. So think smart. Make sure you don't forget about the CDFI. We're built for the small business owner. We're built to help you. And so don't forget to utilize us. And if we have to say, hey, right now you're not ready, when you think, listen to that, you're not ready right now. Let's help you get to your next step. We may send you back to BC Launchpad to get, hey, you need to go to that business credit class, and you also need to go open up that business checking account. It's a no for now, but in the next 6 months, work on these things and come back. That's how CDFIs work. Don't give up and be like, oh, they told me no, and get in your feelings. No, work on those things. We're giving you true, honest feedback and not throwing you out there to the wolves. We're giving you the gears of what you have to do and telling you what turns to take so that you land where you need to land at to build your business. Okay. So let's see what you guys have all learned. This is where I want everybody to utilize that chat box. So we threw some scenarios in there because we want to make sure y'all really understand what we just taught. So here's our first scenario. So we have the health and beauty supplements and more. We really tried to base some of this off of taking names out and utilizing some of the applications we've taken. So Janice has been in business for 5 months. She has a business checking and savings account that she operates her business finances out of daily. She is looking for financing to help purchase equipment and inventory for her new business. So what type of loan should Janice apply for? So throw some stuff in the chat. What type of loan should Janice apply for? Let's start there first. Tamika, what are they saying in the chat?
Can you can you do the scenario question again for those who are eating on some McDonald's and couldn't process it?
Janice has been in business for 5 months. She has a business checking and savings account that she operates her business finances out of daily. She is looking for financing to help purchase equipment and inventory for her new business. So what type of loan should Janice apply for? What are some suggestions?
So we have one that says secured loan.
Okay, so secured loan because of the equipment. Very good. Yes. Yes. Any other options out there?
Everyone's quiet.
Okay. And good. Okay, so a secure loan, absolutely, because of the equipment, the purchase of equipment. And then based on her information below, could she possibly qualify for a business bank loan? So you have her business checking account at $2,500, her business savings at $500, and she has a personal credit score of 814. So what do you guys say in the chat? You think she'll get it approved? You think she has a good chance?
814 doesn't exist. I'm just teasing.
Huh?
They said 814 business credit doesn't exist. I'm just teasing.
Oh no, that's her personal credit.
Oh, or personal credit, 814.
Yeah.
Well, she doing good.
Yeah, she's doing real good
But she's only been in business for 5 months though, so she doesn't have anything to show. She's actually there's a huge liability because she hasn't been in business for so long, right? Come on, you guys, come on, help me out here.
Yeah, so we have some comments that said she should get a business credit line, small business administration lending, apply for a grant, and then someone said she's approved at a low APR, hopefully.
They got her everywhere.
Yeah. So there's a lot of good that what you guys have said because that showed y'all was listening. So there's a couple of good things here. One, she could get approved, and a lot of people forget about this. Just because she needs to purchase equipment, she could purchase equipment with a credit card, right? Because she's a startup business, she could get approved for up to $25,000 with a business credit card. People forget you can purchase equipment with credit cards. Many businesses do that today. There are credit cards, and most institutions will go up to, especially because we're CDFI that is a credit union. We offer a business credit card. So we offer a business credit card up to $25,000. So a lot of small businesses, we do this all the time, may have equipment that's only like $3,000, $5,000. She can take that credit card, she can purchase her equipment and her inventory with that. I told y'all that when we first began the class, that you can do your inventory, you can make purchase equipment, and once she builds that revenue, she can work on paying that credit card balance down. Based on that personal credit score, she also has good character of how she has maintained her personal credit. So she qualifies as a startup business, and they're also probably going to look at the financials of her W-2. So remember, you're a startup business, they're going to look in the different ways of your personal, and they're going to also look at, okay, let's take a look at her business checking account balances. They're also going to see that she does have quite a bit of funds in her checking and savings account and how she's operated so far. So yeah, this is a startup business that's here.
Thank you, Shontay. We have 5 more minutes of question and answer, and then we're going to open up the floor for networking with Shontay. So let's get all the questions, because we don't want everybody to hound her during the networking time on questions and answers. So let's see what questions you guys have out there.
So we have a few more questions. One question is, how important is an EIN number in the lending and grant process?
The EIN number?
Yes.
Say it again, Tamika. I heard the EIN number, and then I heard something else.
In the lending and grant process.
In the lending and grant process.
Mm-hmm.
So that's a mixture of me and I think T on this one, but I'll start first. The EIN number, I always say, if you're going to run your business and you know that you're serious about being a business owner, why not go the route of getting the EIN number? I think that it saves the room for you start running off your social security number, everything is falling under your personal. It's going to fall under your social of your business. EIN numbers are so easy to attain and get. It is great to have an EIN number because it separates what you're doing personally. And an EIN number is just establishing the establishment of your business. You separate everything. And it just makes it easier for you as a business owner. And, it also, I've seen too many business owners where they run off that social and they start growing and they want to change the entity type from a sole proprietor to a corporation. And now they got to start all these steps over. So, from the beginning, I always tell business owners, going to get that EIN number. It's easy and is going to save you a lot of distress later as you grow out your business.
Yeah.
Now,
Shontay, you're absolutely right. She said, just to piggyback what she had said in his shared responses, your EIN number is for tax purposes only. It's for business tax purposes. It helps the IRS identify who you are as an entity. Are you a sole proprietor? Are you an LLC? Are you an S corp, and so forth? So they have many reasons. Here's one big reasons why you need an EIN. You can't open up a banking account under a business account without an EIN. So you do need an EIN. It's absolutely free that you can get it right now online to help identify. So if you're trying to set up your payroll, if you're trying to file tax returns, if you're trying to do a bank account, you need that EIN number. Another big reason why you should have the EIN number is what Shontay said, the most important: separate your liabilities. Just like intermingling funds with personal funds and business fund, intermingling your social security with your EIN is very dangerous to do, which means if somebody coming for you, let me put it this way, somebody coming for your business with your social security number, they're coming for your house, they're coming for your cards, they're coming for your kids. With an EIN number, they're just coming for your business. And you can dissolve that one and start all over again anyways. So get yourself an EIN.
And then somebody said something about the grant. Somebody said something, they asked the question about grants with that also. What was that question, Tamika?
Yeah, it was with the EIN. How important is EIN number in the lending and grant process? So if you're applying for a grant, do you need an EIN?
I would say for the lending, Shontay can speak on, I think it's a must. For the grant, it is not as important as it is for the lending, but I highly recommend and encourage you to separate your information. Oftentimes, when we're talking about grant funds, that's public information. Not that your social security number would be disclosed, but there have been occasions where that proprietary information has been disclosed because it was under the grant. So just protect yourself, protect your identity, and run it under an EIN.
And same thing for the bank side as well. You know, when you go in front of any banker, the banker gonna be like, "Oh, I'm not an accountant," because we're not. But that's the same reason why we can't tell you this, but when you start a business, it's smart to have an EIN because on your social, I have seen it as long as I've been in business. I have seen people business accounts when they have it under their social security number, when they get levied and because they got sued, and the boy, they run all their financials through that business, through their social security number, and everything gets taken, and then they are homeless. So have that EIN because if your business gets sued, it's on your business side, not your personal. So be smart. And then here's the other thing is if you keep it separate and you have the EIN, most institutions can have an understanding that, okay, the business got sued. Let's look at your cash flow. Let's look at your business. But if you personally got wrecked and you got sued, it's a whole different story because now your credit's messed up. Yes, we're going to look at your credit. CDFIs will work with you though. But if it's everything, you put your entire business at risk, you kind of make it where it's hard for any institution to work with you. So it's just wise to separate.
Thank you, Shontay. We have a lot of questions and we thank you guys. We're not going to dismiss the questions. We're going to open up the floor shortly. We want to thank Shontay for being such a wonderful presenter. I wish we had more time because these questions are pouring in. And so we want to thank you for being just a wonderful community partner, educating our community on the importance of finances, lending, understanding where they are at as a business and not be afraid of money. We often talk about money and we're afraid where we're at, but where you're at is the most important part of understanding how to grow your business. So let's give Shontay some claps in our chat box.